of key levels. So you see this high here, the price went above this previous high, took all of the liquidity, and now we're looking to close lower on the weekly time frame with higher volume, with increasing volume. So that's pretty bearish in the highs, but we have to see what happens now because we're still in the range. I think people will look at this and go, okay, we've had a clear rejection in the highs. Now what? What's the next plan? Do you buy? Do you accumulate, or do you wait for lower? And I think we are in a kind of key moment for Bitcoin because it's very possible that we go lower. If you look at how extended this price action is from the lows to the highs, we had a 216% increase in value. That's quite a run. But it has taken a long time to get there. I mean, it started in November. This green doji here, and it's come all the way through till this. That was November 22, and it's come all the way through till January 24. Yeah, so that's quite a run. Now, if this is the wave one, if this whole move is the wave one, then technically speaking, the correction can go as far as it wants as long as it doesn't make a new low. Technically speaking, there's no reason why it can't go down all the way to make a deep correction. When you look at this higher time frame price action, it would look very bearish if it went down past this area. But actually, when you look at the charts, that's the best place to buy. The best place to buy is definitely going to be a swing failure of this low here. That's the best place. And that would be about $23,500. That would be the best place to buy Bitcoin because you're coming into a key resistance area on the higher time frame, and you're taking liquidity from these lows, and you have the best risk to reward because you're catching the price at that pretty much all of the selling has been done by that point. And so yeah, that would be easily the best entry for Bitcoin without a shadow of a doubt. If anyone is looking to buy Bitcoin, that's where big orders will be placed. Right underneath this red wick here is, I think, the destination. Now, whether the price can get that far or not will certainly depend on how many limit orders are placed in the path of Bitcoin coming down. And it's all about supply and demand balance in the market. That's all it comes down to. And so obviously you're going to get aggressive shorts, and I think the lower the price gets, the more aggressive the shorting is going to become as people try to cover their positions, or they start shorting the market because there's a clear downtrend now. But fundamentally, we're still looking for some sort of ABC correction. If this is a 5 wave up in the wave one, so we're looking at 1, 2, that's 1, 2, 3, 4, 5, something like that. This was like a really extended 5. Usually the 3s are the most bullish, so hold on, does that work? Let me have a look. The 3 can't be the shortest. It doesn't look like it's the shortest. Go down to that wick. This 2 doesn't actually go to this wick. That's part of the correction. It goes up to this wick here, or basically there. And then this goes down to there. That works. So you have a 3 that's slightly longer than the 1. And then you have this kind of extended 5. And part of that extension was to do with the hype train of these ETFs. Kind of like a disbelief rally, that 5 was. And I think a lot of people, as soon as we cleared this range with this kind of bullish impulsive candle, then I think it was just pushed up by people just leveraging, super leveraging long. And now at the tops we have a lot of FOMO, which has been keeping the price up. But we've obviously hit a key level. The key level that we've hit is not only is it a swing failure of this this previous pivot high, but also it was of this bull market range. It was the value, the point of control of the volume rate of this whole range in the previous bull market. So this is the bull market range, and we basically came in to take the liquidity and reject off this point of control, and that happened on the weekly time frame. So that's a clear rejection of that level. So we are now expecting some sort of ABC correction, and I think if I was to do a fib, a trend-based fib, yeah, I mean, it's overextended. Look, it's past the 1618, and then if you go to, say, the 2 to the 3 to the 4, it hasn't even managed to get to the 1.618. Let me see this one. The 3 to the 4. Looks like the 1-to-1. It's basically the 1-to-1 from this low to the 3 to the 4. You know, this whole move is a 1-to-1 from here to here to here to here. And I like the timings, actually. If you look at the timings, it looks quite symmetrical, this whole kind of pattern. It's quite symmetrical. So now I think I'm expecting some sort of ABC correction, and maybe that will be a similar timing. Like if I think about timings as well, let me see. I take it from, I'm not sure which low, but let me take from this one to this one to this one. Look, say, look, in fib time it comes to the 1-to-1 roughly. Oops. Let me see. Get it to this one. So we're kind of in fib time on a 1-to-1 from this move to here, and then from this move to here. And basically it's from here to here and then here to here is a 1-to-1. That's a 1-to-1. So this looks right. This kind of, this high looks correct. And I would expect some kind of higher low on the lower time frame. I'm going to have a look at that. And then that will be the place to short, because I think this whole structure looks pretty good. And so the next fib time is going to be basically the beginning of April. Look, the week of the 8th of April. So I would expect some sort of correction. Like, we have to see how this corrects, because are we going to get some sort of flat correction, and is it going to stay above this 236 like this? Or are we gonna, and I would expect the price to come back to this 236 at the very least, this higher time frame fib retracement. That would be the first key level on the fib as far as fibs are concerned. Now, I haven't actually done it 100% accurately. Let me do that now. Let me just make this accurate. And then let me pull this to the low. And then in terms of the fib time as well, let me make that accurate too. Okay. So actually, maybe next week is going to be the 1-to-1 on the fib time. So maybe the price goes up one more time for a short. We have to see how that plays out. And that would be, I think if we are going to go up, I'll explain it in a minute. But as far as timing is concerned, we're on time. And I think any more upward move now would just, it wouldn't look right in terms of the rhythm and the rhythm of the way the price moves. If you see that, that looks very nice. This puts fib time actually look, it puts the 1618 on the 22nd of April, and that is the Bitcoin halving. It's at the last week of April. Do you see that? So there is a little bit of rhythm with the way the price is moving, and to all intents purposes, there's no reason to think that the price doesn't go up when Bitcoin halves. I mean, historically, it always has. And the fact that this 1.618 on fib time lands perfectly on that week is a really key factor in determining how the price is going to move to that point. And so I'm expecting some sort of ABC. Now, like I said before, ABC, the depth of this can be, as long as we don't go underneath the 0, this is correct. And now obviously our target is this yellow line, which is the 1618. As long as it doesn't go underneath this level here, it can go all the way down, but it mustn't cross this level here, and that would be fine. And the flatter it corrects, I think, the higher the prices we're expecting, because then what you can do is you can do a trend-based fib extension. So if we have an ABC from this fib time, I'm just making this up. So just bear with me. If we have a flat correction, so it comes down to the 236, goes back up and comes back down to hit. If that's our correction, a flat correction, and we hold the 236 as support and we land the C on time, then basically, as far as what you can say then is that then that is your 2. And so on the higher time frame, what you can do then is you can draw this to there as your 1. That's your 1. And then your 2 would be there. And then you would be going for a 3. 3. And then a 4. Don't know how it would work. Looking at the timings, you get a correction all the way there. Fine. I don't know how this is going to work, but I'm just going to make this up for the sake, just for this. I'm just putting those random levels there. But then what you could do is then you could say, let me just change this color. Let me change this color. Not that one. Again. So you have, excuse me. So you have your 5-wave arc, right? Actually, the color is too similar to the correction, so let me just change it again. Sorry. Green. Let's just do green. All right. So you have your 5-wave up, 0, 1, 2, 3, 4, 5. And that is your 1. So on this yellow one, I've drawn it as a 1. Now we're expecting some kind of 2. The 2 is going to be an ABC. And then you're going to have your expansive, the most bullish part of this price action is the 3. Then you're going to have another correction, which is a 4. The 4 is going to be an ABC, right? So this is going to be some sort of ABC. This 3 is going to be a 5-wave up. So from this 3 move, you're going to have 1, 2, 3, 4, like that. That's going to be a 5-wave up. And the last one is also going to be a 5-wave up. Like that. Now, I don't know how this is going to play out, but I'm just explaining to you that the bullish impulses are 5 waves, the corrective impulse, the corrections are 3 waves, and each bullish wave consists of a bullish 5-wave too, also. And you can just take that and extrapolate that and apply that down in the different time frames. So every wave consists of 5, bullish wave consists of 5 waves, and then the wave one of that wave consists of 5 waves, and the wave one of that wave consists of 5 waves, and you just push it all the way down to the lowest time frame. And it's not easy to see, but it does happen that way. Now, with the corrective waves, you can also get an A, B, C, D, E, but that's doesn't happen too often, so we won't go into that. So this is just so that you understand what I'm looking for in terms of the price action. I'm not expecting the price to just go up. I'm expecting waves. And so right now we're looking at this ABC flat correction. And then what you can do is you can take your trend-based fib tool and you can take it from the 0 to the 1, assuming that this is the 1, to where the 2 lands. So I'm assuming the 2 lands on the 236, and then we have targets. We have fib-based targets, and based on if we correct on an ABC flat to the 236, then I would expect the 3 possibly on a 1-to-1 to get to there, roughly $1,118. That would be the 1-to-1. So that will be the 1-to-1 on this trend of this 1, 2. That would be the 1-to-1. That would be correct. And obviously it doesn't have to go that far. It obviously could be much weaker. But then that 3 would be much smaller than this 1. And if that was to happen, so you have to see how far the 3 extends. The 4, because that's the 1, the 4 cannot come underneath the 1. That's the rules, right? And then you'd have a weak 5, because the 5 can't be longer than the 3. You'd have something like that, maybe, and possibly even weaker, possibly just like that, or even less like that. And then that's kind of what we're looking for potentially. if the 3 can only manage to get up to whatever this level is, which is the 618, based on this 2 going down to the 236, okay? And then if you have a 1-to-1, you'll still possibly think, like I'm thinking to myself, well, sure, the 4 can technically come back to test this 1, but I think realistically you don't really want you want this high to offer support on the way back down. I think that would make sense. And so then you're looking at something like this. And then if you were to draw a Fibonacci retracement from this level to this level, that would basically be the 50%. You see it? It's the 50%. So the price would come back to the 50% to make the 4. And then the 5. Well, that's a 1-to-1. Really, the 3 can't be the shortest. So I guess you'll probably, it depends. You have to see if it goes a little bit more, a little bit less. If it's a little bit less, then 5 has to be less. If it's a little bit more, then the 5 can be more. So it will all depend on how far the 3 extends. But the 5, the length of the 5, whether it's shorter than the 3 or whether it's longer than the 3, will depend on whether the 3 is longer than the 1 or shorter than the 1. So this line would be very important, this 1-to-1 level, to see how far the 3 gets. If it gets low, if it comes lower than the 1-to-1, or if it comes higher than the 1-to-1, that will determine the 5. And obviously, you know, who knows? What if the 3 got up to the 1.618? I mean, potentially you're still looking for a deep 4 correction, but obviously this fib retracement would go up all the way to there, and then you're looking to correct back into this to the 618 instead of the 5, instead of the 50%. But if you have a massive 3 like that, you could potentially have a bigger 5. It's possible, but I think in the context of Bitcoin, I'm not necessarily expecting the 5 to go much farther past the 3, but who knows what can happen and how the price can correct. And this is all determined, there's a lot of lines, but this is all based on this flat, right? Now, let me delete that. Let me get rid of this trend based. Let's imagine if this correction is a little bit deeper. Let's say this goes down to the 382. The B goes up to backtest the 236. And the C comes much deeper and it comes into the 5, into the 50%. Not as far as the 618, but let's say that's what happens. Who knows how this is going to play out? And then that would be your 2, right? And then you could do a trend base extension from there to there to there. So from the 0 to the 1 to the 2. And then you have different targets, because the targets are based on this correction now, on this trend from the 0 to the 1 to the 2. And so naturally you can see that your first target, the 618, would be at 55,000 roughly. The next target would be back at the all-time high. You see how the 786 comes back to the all-time high, and then your 1-to-1 would be thereabouts 87. And if you extend all the way up to the 1.618, so naturally your targets so the 1-to-1 would be less. So depending on how deep we go now, depends on how far we're going to go in the future. But in terms of bullishness, usually deep corrections are more bullish. So possibly if we go deep, we'll possibly overextend. Now, I don't have all of the fib levels here, but usually what I will also do is have these two and have these as intermediary targets. It's possible for it to be like that, to go somewhere between these two levels, maybe up to the 1.414. And then I guess I'm still expecting, whatever happens, for whatever reason, I'm still expecting after we go to the 3 to come back to back test this all-time high. I don't know why, but I think once we clear the all-time high, I'm still expecting the price to come back, because usually you're going to get the latecomers and they're going to look to catch the retrace. This is going to be where the retail comes in, basically. Possibly this wave down here, they'll be looking to catch the 5 because they're the latecomers. And the 5 wave, the reason why the 5 wave isn't always bullish, because that's where the biggest take profits are taken for those people who are at the lows. They've seen the 3, they wait for the next correction, and then they look to take the rest of their profit. And so obviously we are looking for the 3 to be the biggest expansion, but it will depend on this next corrective phase. I think we're done with this wave 1 now, because it looks right. We've got the 5 waves. We've come into a key resistance level, which is the point of control, and we've taken the liquidity from this high. And in terms of timing, we are on time, so it looks correct in terms of fib time. Next week would be the 1-to-1 from the low here, so it looks quite good. So I think on the higher time frame we are now looking for a correction. So let me get rid of this. Great. Rename EW. Can hide all of that. And then let me zoom in a bit. Let me have a look at the candles actually. Obviously the monthly hasn't formed yet, but we have taken the liquidity from the previous month high. That's not a good sign. We've taken liquidity from that previous week high. We've got increasing volume on a potentially a bearish candle which ends today, and it closes under 50% of the body of the previous week's candle. It's a very bearish candle. After you see that candle, you're not looking to buy, you're looking for you're looking to sell. So we have to see how this what the sells, where how that pans out. Let me have a look at the 2-week candle. In a 2-week candle, you've got this kind of potentially, we have to see how it ends. Does it end tonight? Yeah. So you have take the liquidity. Yeah. So maybe in the next 2 weeks, we could be expecting a red candle now. Look at that run. And you can actually see on the 2-week candles how the price is slowed down. It's like it's ready to turn. So look at the 3-day candles. Okay, so that closed 1.5 days ago. That's a full bearish reversal. And what's so bearish about this candle? Not only did we take the liquidity from the previous candle at the high, we closed underneath the previous candle wick, and we closed underneath this green candle open as well. You see that? So we've closed under some key levels. We've reversed the volume on this green candle and almost all the volume on this green candle. The volume's been reversed. So all of the work, the good work done by these 2 candles have been reversed. That's what this candle is suggesting. And the volume's come out. The volume's gone in, the volume's come out, and the price is lower. So none of these highs reflect the true price in terms of where the volume is at currently. And so right now on the 3-day chart, we're looking to back test this previous wick low, which look, it's coming perfectly. We're still underneath that candle open. And so, yeah, this looks like a bearish reversal. And the daily chart, well, that candle is disgusting for the bulls. Look at it. It's not nice at all. And again, it just confirms what we already can see in the other candles. This daily's come back to back test this, and it's confirmed it as resistance. And today, I think it's just giving the bulls one more chance to prove themselves, because what the bulls need to do is, in the first instance now, they need to close. I think for this to become bullish again, I think the bulls need to close 50% into this red body. This candle needs to close up there. Unless you see that, this is not bullish. There's no bullish reversal in this bearish reversal. And it has to be a close. It can't just be some sort of wick. So I think I'm looking for some sort of lower high, but not on the daily time frame, because the daily time frame is still bullish. That's the problem. Look, see, on the daily time frame, this is the higher high, this is the higher low. So actually on the daily time frame, we haven't confirmed a change of market structure. We actually need to go down here to make a lower low on the daily time frame, and then we can come back up to make a higher low, lower high on the daily time frame. We're trying to, so the bears are trying to make, basically the bears are trying to come underneath this level here. That would go from a higher high to a lower low, higher high, lower low. That will be the first step into changing market structure from bullish to bearish. And I think that's what we're seeing right now. And as you go back in time, I mean, if you go to the lower time frames, you can see that it's already happened. So on the 4-hour chart, you can see that this was a higher low. That was a higher high. This was a higher low. That was a higher high. We've made our lower low. This is the lower low now. And so what we're looking to do now is to make a lower high. Yeah. And the way to know if we have a lower high is if we make another lower low. We keep on making lower lows. Now, this doesn't look like a lower high to me. So I would expect some kind of come up first. I would, but you never know. It all depends on people. We're held by the 236. I mean, I think I would expect it to come up a little bit. This would be your best entry, the golden pocket, but that's really looking bullish if it gets up there. And then let me do a volume. So let me do it from this candle here. I think the 382, if it could get up that far into the point of control, would probably be the safest place to short. Probably, if you're looking to short, make that lower high. You've got a high volume node, you're into the top of the value area, you're coming into a fib retracement level from this high to this low, because you're not expecting, I don't think I'm expecting it to go up all the way up there. That doesn't make any sense. I don't expect us, now that we're changing the trends, I don't expect us, yeah, that would look weird, because then you'd be going back above the value area high. That would look really bullish. And it'd be very difficult to short that. You'd almost expect, we got up there, you almost expect the price to at the very least go and take the highs one more time. It wouldn't be weakness for the price to get up there. That would be quite strong. So I think maybe you will be looking for some kind of, you couldn't just short this in the lows. You're looking to short a pullback into a key level. And so in my mind, that would probably be the area of interest. Yeah, you'd just be looking to take out the lows for the first instance and then much lower potentially. And that would be trying to trade a lower high. And alternatively, if that fails, then possibly going up and not succeeding to capture that value area high could be a second attempt at shorting, something like that. But I think it depends on how bearish we are. It depends on how many people are looking to short, because obviously the more people that are looking to short, the harder it is going to be for the price to come in past that 382. I mean, it's already struggling to get past the 236. I don't know if at the weekly open tonight the price is just going to market sell. I have no idea. You can't predict that. I would never do that. I would always wait for some kind of retracement into a key level. Even if the price went down, I would look for a retracement to short. I wouldn't just short. So if for some reason the price does go down at weekly close, then probably you'll be looking for to take out all of these lows, see where it ends up, and then just pull the fib down. Maybe it went up, when maybe it goes down to there, and then you end up shorting the value area low if there's a reaction, you know, if there's a reaction, if that's what you're looking to do. I think it's a lot safer to short in the up here than down here. It's a lot safer to short into the point of control than back into the value area low, because for whatever reason this could go up. So I think that was something that I would probably be looking for, just to try and get one more attempt back into that area, and not manage to do that. And that would make sense, I think. We're looking at the daily to come back up to possibly try and come up to this wick here, or maybe this level here. Get people bullish before it dumps again, you know. That's how the price works on Bitcoin. It's very it does the opposite. So at the very least, if you're shorting there, you're shorting at the top of the range, you know. You're not in the middle of the range. You're waiting for the price to come up to short, and then you'd obviously look to take profit at in the initial move down. It would be the value area low. It would be at the bottom of the range, because you just don't know. The other thing about the price is we don't know if we're just going to range for the next few months. People are getting bearish, but we don't know what's underneath here. We don't know if there's billions and billions of dollars worth of orders here. We just don't know. We don't know if this is just going to do this, you know, like, and just do this. We just don't know for the next few months, next couple of months. No one can predict the price action. So that's why you have to take profit. But I think on the higher time frame, I don't know if I would long unless I saw like a swing failure pattern. Probably it's hard because there's three lows that the price could swing failure off, and which one do you take? There's one there. There's one there. these are pretty much the same, but and then you have to take profit fast. You have, you don't assume just because of the momentum is turning, you don't assume that the price is going to swing failure and then go up. It could just do this and then just continue going down. So usually when people take swing failure trades, they will take their profit quite quickly. Once they're in profit, they will take their profit, so that if it does do that and they do get stopped out, they don't lose on that trade. They still make money because they've already taken their profit. So you have to take enough profit to cover the loss if you get stopped out. If that's what's happened, that's how it's done. So you have to be wary of that, because it could just go through and aim for the next level, and it's hard to find other forms of confluence, because where's the next pivot? Well, maybe this low here. The golden pocket is much lower. That's really where you want it to enter, the golden pocket. So I don't know, I think it's more of a scalp. I think the shorts are probably, based on the candle formations that I'm seeing now, I think shorts are probably going to be the safest trade. And probably what you're looking at is when the weekly closes now, if we don't get, I don't know where the weekly is going to close, maybe it closes down here or lower, who knows. But basically, I think you'd be looking for a 50% retrace of the body to short. So wherever this is to there, probably the price to just retrace up to the 50% to go back down. Like, I wouldn't expect it to go up all the way, but I mean, it might. You see, at the moment, you have a untouched weekly level, which is being formed. So when the week closes today, you'll have a new liquidity level formed, and it will be here. You can mark that out. That's your weekly level. That's your liquidity level now. So it's a new strong level. And it'd be very unlikely that the price goes up to that level. But I mean, it could happen. But you're going to have a lot of liquidity there to go back down. A lot of people are looking to exit now. And that's why these points of control are so important, because there's a lot of trapped longs looking to exit. Yeah. A lot of trapped longs. So, I mean, I think if a lot of people, like if you're not leveraged and you're not already liquidated, on this range, the point of control shows you the price at where most of the volume is. So most of the volume is above us now at 48272, roughly in that area. And so I think a lot of people now will be looking to exit their positions and wait for either lower or possibly higher, because they want to see lower prices, or they want to see so they can enter lower and scale in lower, or they're looking for a sign of strength. That's what you're looking for, lower or signs of strength. And right now we've just experienced a massive sign of weakness. Yeah. So unless you see a massive sign of strength now, like you're not going to be in a long, you're going to look to exit your longs. And because most of the volume is here, then it's anyone who's in a long now and is underwater, trapped longs, will be looking to sell to break even. And that's why that's the best place to enter a short, because you're also you're basically trading in the same direction as trapped longs looking to close their positions. And so it is it's also possible that people have bought the dip and now their break even is somewhere here, somewhere there, and they've overpositioned. They're not looking to wait to try and make money off this trade. They'll be looking to exit and then reevaluate. And the reevaluation is going to be if the price shows strength and it does come back up, closes up, and it back tests and it holds a support, that's your strength. And then you can just enter long again. You can reposition in, and then you're not taking the risk, and you have this key level underneath you, the point of control, which again in reverse will act as support, because you have the same situation but in reverse, where you have trap shorts who are now underwater, who are looking to get out in reverse at the point of control. And that's why the point of control is so powerful, because it allows people who are trapped to exit at break even if they go underwater. So that's why it's so powerful, and that's why that's how you can use the point of control as a reference for when you're entering and exiting your trades. Not just the point of control though, like you can also use high volume nodes, especially when they line up with significant levels of confluence, such as higher time frame fib levels and obviously swing failure liquidity levels. So I think if we can get a pullback up, a short would probably be the best plan. Otherwise, I think, as I explained earlier, I'd probably be looking for this 236, possibly for the first support. I don't know if we're going to form a flat or not. I do imagine that on the higher time frame, if someone is looking now to position into Bitcoin, that they're going to be looking to enter at these higher time frame fib levels. And I mean, that's a strategy. People will break down their entry into portions and they'll be looking to enter on the fib level. So it might be like 10% on the first fib, 20% on the second one, 30%, you know, who knows? And they'll just keep on positioning in. And they'll be looking to do that. People enter differently. So I don't want to say that's how they're going to do it, but you're going to get people look at these major fib levels and they will look to enter on spot. And if you want to trade, then I think if the price does start to work its way down, then in my mind, I'd be looking for previous ranges. So this is a previous range. And obviously you see here, the value area high corresponds with the 236 on the higher time frame. So you could potentially get some kind of bounce there. But then you have to take profit. And so if you do get a bounce there, you can do a fib retracement all the way down to there. And could it bounce all the way back up to the golden pocket? I really doubt it, because I think one thing I know about Bitcoin is when people sell, they really sell. They go for it. The price just goes down. So I think probably you'll be looking for the 236 or the 382. The 382 would correspond with this value area low if the price got down there. So probably that would probably be the first place to short again, probably. Who knows? But I think there'll probably be a bounce here in this mini range. But what will happen is, depending on how fast the price comes down, obviously you don't catch a falling knife. And so it's the same thing with longs. Longs aren't going to be coming in until the price settles down. They're not going to be just jumping in, hoping for the best, because, you know, the price could just go through that level. And if it does, it'll probably be bounce on this point of control here, go back up to back test, and then you're looking for a short on the back test of that, because that will be the value area high of this previous range, and the 236 on the back test, because we've just gone through it. And it'll be quite a violent drop. And then obviously you're looking at the next levels, the 386. In my mind, the 386 is going to be the first significant area of interest for me, because it's clearly an SR flip. If you look at the price here, if you look at the price here, it clearly showed resistance And so I would expect, I don't expect it to just go through. Let me see if that lines up with some kind of fib retracement to here, roughly. It does, see, it comes, it's like the golden pocket as well. It might come through a little bit, but then we might get some kind of a mini relief rally. And maybe that's where the price comes to form the A, and then we might see a B. We don't know how long that's going to take either. But I am expecting the C to kind of land somewhere where this fib time is, which is somewhere in the third week of April. So maybe we do come down to this 382, into this golden pocket, into this SR flip to form an A. And then maybe this will go back up to back test this range here, clear out the late shorts, and then you're going to have, and then this, I don't know, this one, could it be back into the same level just to take the liquidity here, just to go up, or could it be much deeper? I don't know. Or could it be much more flatter? I don't know. Can't really predict these things. I think the bullish, if it was bullish, it would be much flatter after you get one deep correction like that, or back test of that. Then you'd be looking for a higher low. And so maybe if it went up to that if it went up to that value area low here, the B went up to that high, and then if we're really bullish here, maybe then you'll be looking for like a golden pocket from here to where the A formed to where the B ended up. So you'll probably be looking for a higher low somewhere here, and you see that corresponds with this point of control in this mini range here. See that? And there's a lot of lines. Let me just get rid of them. So there are some options of what could happen in this correction, but I think it's going to be in accordance to fib. It always usually is. So, you know, draw your fibs and see what happens. What time is it? It's 1:12. All right. Are there any questions? I know that there's a few watching. Does anyone have any questions? Feel free to type. I'm looking at the chat. No questions. That's good. If there's no questions, it means I've done a good job. So I think I'm looking for a short. And then what I will do, I'll show you, is I'll just draw a line here, the point of control, rename it to point of control. Oh my God, I've lost it. There it is. Bring it down a little bit because I want it to activate before it hits the level, and I'll set an alert. You have to write what you want to do. Price coming into P, look for shorts. So there's no confusion, because you're going to get this alert and you're going to go, oh no, what was this alert for? Because I can't remember. And then I won't even look at this chart, because at the moment I'm not looking for longs. You could put an alert on these lows. Actually, I will. Don't really want to long this low, to be honest with you. Maybe this one or this one. Maybe this lowest one. No, I'll put it on the earlier one. The earlier. Possible SFP, I can't spell. Look at price action. So I've got a couple of alerts. I'm not going to even look at this chart now. And that's it. Um,